What's up everyone, and welcome back to the Modern Day Trader channel. This is my fifth weekly review, so number 5. Yeah, we're pushing. And it's been a good week. Back in the market this week, very active, 3 trades taken. And yeah, I think just today we'll take you through one of those, but we'll go through the performance because we're active again. And then just taking you through what my plan is for the second quarter, as promised last week. So yeah, let's get right into it. So 3 trades taken this week. USDs are long, which was a loss, 1R, which is a 0.25%, 0.25%. Pound JPY short, also a loss, 0.25%. And then the last one was EURUSD short, which was a break even. So a weekly return of about negative 0.5%. And so 3 trades taken, but I want to show you guys the EURUSD trade in a bit more detail because that occurred just before NFP, and to be honest, I think probably didn't play out just because of the volatility that came in before then. So let's jump onto the charts. So as you guys can see, EURUSD, if you were live with us on Wednesday last week, you would have known that we were looking for either a continuation to the upside after we had this impulsive move higher, or a corrective move, ideally a corrective move down into this POI here. So we did start to get the corrective move. If I drop down into the lower time frames, this is basically what I was talking about, and this is exactly what Marcy looks for when he says he likes to see structure confirmed. You could see we had high, 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 low, high, high, and then we got the break of structure and we got our first lower low. And what he was basically saying was he doesn't like entering off this first correction here because we had a correction, lower high. He likes to wait for that second confirmed break lower, that second lower low, before then looking for an entry in the previous POI to continue that to the downside. So that's literally a representation of what Marcy was explaining there in terms of what he likes to see when looking for an entry, as well as what I typically look for in these sort of counter trend positions. So we did get that. This is the 30-minute time frame, low time frame. High time frame is bullish for our structure, but on that lower time frame, we're correcting lower into that POI. So I'm looking to capitalize on those counter trend moves. These are positions that I didn't take a lot of in the first quarter, and so I think I was just a lot more aware of them. 2 of my 3 positions this week were actually counter trend plays. So yeah, good to see that I'm kind of incorporating those into my data set very early on in the quarter. So yeah, as you can see here, 30-minute POI, mark that off, last point where price became bullish at that most extreme point before we broke structure to the downside. Price corrected, mitigated that POI, dropped down to the micro entry time frame. You can see here we had the run of liquidity, high momentum break of structure to the downside, and then that is when I placed my limit order, which was triggered in there, sell limit order, and then maybe just coming up to the 15. That was triggered in. This started to play out quite nicely, 1%. I went break even, and then you can see it stopped me out. It's going a bit far. 1% break even, stopped me out there. And that was fine with me. I guess this was probably about 30 minutes before NFP. I ideally just wanted to be at break even before NFP. So yeah, I was okay with that because I knew there was quite a bit of volatility that would have come in at that point in any case. So just coming back up to the POI time frame, you can see as NFP kind of played out, this became quite volatile in the area. I'm liking that, and then this is how the market closed for the week. I'm liking that this was our initial POI. Obviously, we respected this level in that we kept testing higher, but failing to close on that POI time frame. And so, price eventually did, I think, when about 30 or 15 minutes or so after NFP came down to hit that TP, which was about 2.6R. But I was obviously out the trade at this point, wasn't looking to enter again, just because we were quite close to the announcement. And so yeah, this is just one of those that didn't play out. Arguably, without this extra volatility, structure would have played out to the downside, and that would have been a fairly clean trade. But yeah, it was just one of those where I expected quite a bit of volatility around the NFP announcement, and we got that. So yeah, that's fine there. Just looking at the equity curve for the week, you guys can see fairly negative. These are the 3 trades taken, 2 losses, 1 break even. And just coming to the FTMO account metrics, same account, 10K account started in November last year. And these, yeah, there you go, 3 trades, USDs are long, pound JPY short, and EURUSD short. So yeah, currently on the account, equity at about $9,730. Start to date return is negative 2.7%. So yeah, still hovering there. And to be honest, I think like I had said, I think pre-quarter one sort of review, there hasn't been much movement on this account, just because my risk has been fairly low. These were risk parameters that I was kind of using last year, but I definitely will be looking to increase that, just so that we get a bit more movement from the results that I'm seeing. But I guess more on that in a little bit. So that is how the week played out. That's how we're going on the account. And now I think looking forward, last week I kind of alluded to this past week, one of my main priorities being sort of planning out how the quarters, what I'm focusing on this quarter and what my goals are, and how I'm looking to essentially achieve the goals that I've set. And looking at the quarter ahead, one of my, and this comes back to the video, the previous Q&A video that we posted just around reviewing your quarter. And it all starts with having your plan and your goals in place, because at the end of this quarter, obviously once you've reviewed how you did, what you do next determines what your overarching plan is. And part of my overarching plan has always been to become a funded trader with assets under management of $200,000. That assets under management obviously coming from prop firm capital. And this has always been a goal of mine, but for the first quarter of the year, exams were really the primary focus. This is part of another goal of mine, which is really shifting into financial services in the corporate environment. And like I'd said in one of our introductory videos, I'm not looking to trade full time and stop working, 9 to 5 or whatever, at least for now. Still very much passionate about financial services and becoming an investment professional in an institutional corporate context. So yeah, that was the main focus for the first quarter, just because the exam was obviously at a set date, so it had to take preference. But now that the exam is done, this second goal of mine, which is becoming a funded trader, is really in the spotlight now. And how I look to essentially tackle this goal, I look at it primarily from 2 points of view. The first, focusing on my 6 pillars of consistency, and the second, which is integrating fundamentals into my strategy. So diving into the first one, what are my 6 pillars of consistency? my 6 pillars of consistency would be consuming content, forecasting setups daily, journaling each position taken, performing advanced self-review weekly, publishing investment analysis, and building the modern day trader channel. Looking at the first one, when I talk about consuming content, this is any form of information or content that I'll be using to increase my knowledge or perspective on my strategy, my routine, my routines, any form of information that I consume for the purpose of improving, myself as an individual or my trading. For now, what I'll be getting into in a couple of, I'd say weeks, just because there's a book I'm finishing at the moment, is Buff Dormier's Investing with Volume Analysis. So Buff Dormier, I first came across him in a CMT podcast. CMT is the Chartered Market Technician sort of association, which is, I guess, the primary sort of organization that focuses on technical analysis within sort of institutional context. And they have a podcast and basically interviews a whole bunch of CMT charter holders and how they're applying their skills and knowledge gained from the CMT charter into their investment process or their places of work. So Buff himself is a CMT charter holder. He's the chief technical analyst and a portfolio manager at Kingsview Partners. And they basically essentially work with the wealth channel in the institutional space. So he's pretty well known for his investment theories just regarding or relating to volume analysis. And he won what they call the Charles H. Dow Award in 2007. This is basically an award presented by the CMT Association that highlights outstanding research in technical analysis. So yeah, he's a bit of a heavyweight when it comes to volume analysis. And why volume analysis? Look, so like I explained, my strategy is an amalgamation of a lot of different strategies that I've picked up, along my trading journey, focusing mainly on technical analysis and price action. But went through a phase of trading a lot of patterns, went through another phase, which is my current plan now, where my trading plan is, I guess the foundation of it is a lot of smart money concepts. I don't consider myself, an ICT trader or anything like that. Even Crypto Circle, who I was with, never declared sort of affiliation with ICT. They said, look, a lot of the theories are adopted from that trading style, but I don't ever say that I trade these smart money concepts or whatever. And I think I'm just at a point where now, and I mentioned it a bit briefly last week, where I'm looking to dive a lot deeper into my trading plan. And this book that I'm going to read from Buff will contribute to developing my trading plan and how it evolves. And so when I look at going a bit deeper into my trading plan, for me it's not enough to just say that I look for structure to form, a high momentum break of structure, identify my protected low, my protected high, mark out that POI, look for mitigation there. Once price gets in there, then I drop down to my micro time frames, and then I look for my entry criteria. That's fine, that's a system, it works. I have a probabilistic edge of that, but what am I actually doing when I'm looking at these various parts? Why do I look for mitigation of the POI? Why is that POI that I've plotted relevant? Obviously, a lot of the concepts are built off of trading circle method, and I can, for me right now, it's just not enough to say these are just smart money concepts, and it is it's what it is. So that being said, me not coming from an ICT background as well, where I know a lot of these principles come from, I'm just looking at the various components that sort of make up the style that I trade. And I know a big part of it is trying to time, or trying to interpret at least, volume in the market. I obviously trade with the trend when there is a trend. I identify the various phases. Are we impulsive? Are we corrective at the moment? And I think volume analysis plays quite a crucial role in positioning yourself in the right market conditions, at least. And so from high time frame analysis right down to entry criteria, volume plays a pretty critical role across that spectrum of analysis. And it's just the starting point, I think, that I've chosen to dive deeper into, because I guess when I heard the podcast and first came across Buff's work, it really sort of jumped out at me, and it was something that I wanted to sort of explore a bit further. So volume is where we will start, and I'll probably grapple with that for the quarter. My trading plan, I think, in the interim will still be updated, and because like Marcy, at the end of each 20 trades, review the previous 20 and then make minor tweaks to improve going forward. So that's coming up shortly, and I'll probably do that by the end of this week. So yeah, consuming content, that's the first one. Forecasting, setups daily. That basically speaks to my consistency in identifying and acting on the setups that are present in the market. I need to be active in my forecasting so that I don't miss trades, and so that I'm in touch with how the market's evolving. I have 3 forecasting sessions a day. My London forecasting session, usually do this around 8 a.m., 8:30 a.m. My New York forecasting session, it's anytime between 2 to 3 or 3:30 latest. And then I have an evening forecasting session, which is just before I go to bed, which is usually about pre-Asian, around New York close. And that's just to forecast how structure will potentially develop over that Asian session, so that when I get to the London forecast the next morning, there's not a whole lot of interpretation that I'm looking for. It's either my bias has played out over Asian session and I'm now just continuing with how I anticipate the market to flow, or something has changed drastically and I'm repositioning myself. But it just goes back to keeping in touch with how the market's developing. So that's forecasting setups daily. Journaling each position taken and performing advanced self-review are both journaling of positions, but slightly different in how I do them both. The first one, journaling each position taken, is my journal that I use, that I just showed you with my equity curve. That is a very high level plot, obviously the setup, the time, the pair, what type of setup it was, entry, price, stop loss pips, all of that, entry screenshot, exit screenshot only. And the journal I use is pretty cool. It's a journal that I actually got from Marcy, and I think a previous group he was in. But there's a lot of cool data that comes from that will basically tell me which pair I trade the most, what my most profitable setup is, what my most profitable trading days are. There's a lot of data that comes out of that journal. And then I add tags as well that I use to sort of characterize my setups. And then I can look at those individual tags and how they perform relative to each other. So that's journaling each position taken. Performing advanced self-review weekly is something I do once a week, every Saturday morning. And this is looking at the trades I've taken for the week in a bit more detail, in hindsight. This is done on my Notion journal. I've got a template, pretty much the similar template that I used when I was still at Falcon, modified slightly. But it basically, again, then looks at, was this trade in alignment with my plan? If it wasn't, why? What were the trade characteristics? What was my psychology or my emotions when I took the trade, when I was managing the trade? What are lessons that I learned from the trade? And then the screenshots that I post here are a lot broader, so I'll post right up from the daily, my 4 hour, my POI time frame, and then all my entry and exit screenshots, just to really take to really zoom out, I think, on the setup itself, how it looked from various time frames, and seeing if there's any patterns or lessons that I can learn from how the setups I'm taking and how they play out based on, you know, how different time frames form. So it's a more detailed sort of view at each position, and it typically takes a bit longer than the journal I just explained. So hence I do it on a weekend when there's a bit more time. And then publishing investment analysis, I want to come back to that one. I'll explain why. And then building the modern day trader channel. This comes down to obviously accountability. We have got a bit of a new structure, if in case you guys are noticing or haven't noticed, where we're posting everything that was in our Sunday weekly forecast, that long sort of long form video, but spread out over the week. So this weekend we'll post the weekly review. On Wednesday we have our live stream analysis, and then every second Friday we'll be posting a variation of our Q&As, where that's going to be maybe only audio format, but a bit more of a discussion. There may be a topic that we're speaking on, we may just be catching up, but that's going to be the Q&A sort of segment. So that's kind of the new structure that we're trying to introduce. But I guess the intention for the channel is still the same. We're documenting the journey, and the focus right now is still to develop ourselves as traders, to pass our prop firm challenges, to hold ourselves accountable to everything that we say we're doing on here, and to really just become consistently profitable. That is still the goal. So nothing's changed there, but continuing with this channel. And I just think, just looking back over Q1, there's been so much growth personally, from, you know, posting weekly and speaking about how the week was, and just diving into detail in terms of how I'm doing and how I present that. Because when I'm looking at all of that, it's you know, causing me to go a lot deeper into you know, my performance and everything that helps me improve as a trader. So building the modern day trader channel, that is the last of my 6 processes. So just to run through those again: it's consuming content, forecasting setups daily, journaling each position taken, performing advanced self-review weekly, publishing investment analysis, which I'm going to get to in a bit, and building the modern day trader channel. The second part of how I'm looking at this quarter, first is my 6 pillars of consistency. The second is the integration of fundamentals into my strategy. This is something that I've wanted to do for a while, but haven't done. I think because the foundation of my edge and, you know, my whole trading experience as a retail trader has been via technical analysis. But I guess through the Kaya charter, which I'm now done, fingers crossed, I got a much broader introduction to, I guess, economics and fundamental analysis, not so much in the context of analyzing you know, currency pairs or equity indices, but just generally how investment managers incorporate different data into the investment process. And so what I'll be looking at, thinking about, you know, my current strategy, I trade primarily currencies, as well as US 30, which is an equity index. So I'll be looking at, you know, forecasting and monitoring interest rates, interpreting inflation data, analyzing the credit cycle. So basically looking at various central banks and trying to understand their monetary policy. For the pairs that I trade, that is obviously typically the dollar, the rand as well, pound, as well as the euro. I think part of the fundamental strategy is understanding geopolitics and local politics. That will probably be a starting point, because I'm quite passionate about that, or at least there's a developing passion. But yeah, I'm not only looking at things from a macro view, and I do want to be able to interpret microeconomics as well. So this is looking at what businesses are doing, what business leaders are, decisions that business leaders are making, how companies are evolving, which sectors are driving the economy. That's typically what I'm wanting to look at from a microeconomic perspective, coupled with the macro side of it. And something that I think will prompt me to develop myself or develop my fundamental edge is publishing investment research. It's going back to now one of my 6 pillars of consistency. This kind of goes hand in hand with the evolution of my strategy and diving deeper into my strategy, because I think with that there'll be a lot of back testing. With incorporating fundamentals into my strategy, I need to test how my analysis from a fundamental perspective sort of plays out in the market, and back testing of that and trying to interpret that. Something that I think will help me or prompt me to do that is publishing investment research, whether that's on LinkedIn, which is probably where I'll start, or any other site that where you can publish investment research is something that I'll really be looking into. I think also then, once I've found a method of integrating fundamentals into my current strategy, then publishing maybe quarterly outlooks or monthly outlooks from a fundamental perspective is something that will encourage, I think, that continuous learning and that continuous analysis, and something that I think will also test how effective my investment analysis is, or my investment analysis skills are. And so yeah, that's how the publishing of investment research kind of plays into this. I think whenever I'm looking at ways to improve what I'm doing, I try to think about how I'll hold myself accountable to doing those things. And putting that on a platform is, I think, a way that I'm seeing that works really well. So looking forward to that. And guys, that is really what I'm looking at for the quarter, the approach that I'm looking to take. As I said last time, clarity precedes mastery, and the vision is pretty clear. We just need to act on it now. We are acting on it. And yeah, let me know in the comments if you have any questions, if there's anything that wasn't clear, or how you're looking to tackle this next quarter. So thank you so much for joining me on this episode of my weekly review, and hope you guys have a profitable week. We will see you in the Wednesday live stream. And do not forget, guys, consistency is a choice that you make when you start doing the things you know you should be doing day in and day out.